what we feel great about is while most of our ETFs are distributed through the wirehouses, so Morgan Stanley, UBS, Bank of America, Merrill Lynch, Wells Fargo, not one of them has put us on its platform. We have not had our primary clients buy into this yet. They're doing due diligence on a lot of things, critically on infrastructure and ops. And of course, that's Ophelia's 21 shares, bailiwick. And they've, the great thing for us, and one of the reasons we wanted to partner with them is they have been battle testing the infrastructure and ops for...
To an ordinary onlooker, the excitement around spot Bitcoin ETFs has dropped significantly over the past few days. Not only are there fewer reports of the record-breaking feats of BlackRock's IBIT and other spot Bitcoin ETFs, but the underlying crypto asset has also seen a lot of choppy price action over the past week. However, experts insist that this is all just starting, and there is still so much to be expected from the new wave of investors that have so far pumped billions of dollars into the Bitcoin ETFs. During an interview early last month, ARK Invest founder and CEO Cathie Wood noted that she was looking forward to when wirehouses associated with big names like Merrill Lynch, Morgan Stanley, and Wells Fargo will begin to offer spot Bitcoin ETFs. The same week, in an interview with CNBC, Bitwise CEO Matt Hougan also talked about a massive wave of institutional demand once major wirehouses begin to offer Bitcoin ETFs. He said, "I think there's an even bigger wave coming in a few months as we start to see the major wirehouses turn on. This is a new era of price discovery." Cathie and Matt have recently given updates about these statements, both maintaining that this next explosive wave of institutional demand is happening very soon and will be bigger than anything we've seen since the ETFs were approved in January. Cathie discussed her expectations and predictions for what's coming next during a recent interview with Empire alongside 21 Shares co-founder Ophelia Snyder. During the interview, Cathie and Ophelia discussed the coming wave of institutional demand through wirehouses, Cathie's $1.5 million Bitcoin prediction, and the chances of an ETH ETF being approved before the end of 2024. We will bring you clips from the interview, as well as excerpts from Matt's ultra-bullish updates about spot Bitcoin ETFs and a new wave of multi-trillion-dollar investors. Please watch the video to the end so you don't miss any important information shared by the brains behind two of the top 5 spot Bitcoin ETFs. To help us get this video to more crypto lovers, please smash the like button, subscribe to the channel, and turn on the notifications bell for more videos. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
Wirehouses, when they learned that 11 of us were going after this market, the first thing they have been doing due diligence, but they're not going to do due diligence on all 11. And they know not all 11 will make it, that they're probably, Ophelia, I don't know what you say, but, I say 3 or 4 make it. I guess I have to say
3
because of
3 to 5.
It's interesting. Galaxy had its conference call yesterday, and according to Galaxy, Invesco is waiting for wealth managers to put crypto on their platforms to approve. And maybe Invesco is very good in that space. So each one has a strength. Now, what we feel great about is while most of our ETFs are distributed through the wirehouses, so Morgan Stanley, UBS, Bank of America, Merrill Lynch, Wells Fargo, not one of them has put us on its platform. And why is this? They wanted to see who the survivors were going to be. They do not want to put their clients' money into a fund that will ultimately shut down. So I think that is becoming clear, although you will have each one of the bottom 6 or 7 saying, no, you have to give us until this happens. In the case of Invesco, I guess it's the wealth managers. We have not had our primary clients buy into this yet. They're doing due diligence on a lot of things, critically on infrastructure and ops. And of course, that's Ophelia's 21 shares, bailiwick, and they've, the great thing for us, and one of the reasons we wanted to partner with them is they have been battle testing the infrastructure and ops for the last 5 years over what now is roughly 45, 46 offerings, different funds, right? Through booms, busts, through halvings, through forks, through airdrops. And, those are all events that that traditional asset managers are not, well, they've not been through some of them. So that's the first thing they're looking at. They're really doing in-depth research on this, and I'm sure Ophelia will get into that a bit more. They also need to know that their clients and they are going to be supported by two things: research, and we give our research away, as does 21 shares. Research, and we're prolific. We're putting something out every week on something in the digital asset space. And they need to know that they, whether they're advisors or other asset allocators, are going to be able to call someone who really understands the space.
Cathie, you called for I think it was 1.5 million Bitcoin.
Base case for 2030 was roughly $650,000. However, what has just happened, the green light from the SEC, we believe will cause the institutional participation to move towards the bull end of our set of assumptions, which was closer to the 5% asset allocation to Bitcoin over time. So we think that probability has gone up. So the probability of the bull case, the 1.5 million, has gone up.
Cathie strongly believes that the next wave of institutional demand for Bitcoin ETFs will be much bigger than anything we've seen so far. As a result, she's even more bullish on Bitcoin, which she believes is on the path to hitting $1.5 million per coin in about 6 years. The only caveat is that these wirehouses are being very thorough about the due diligence into these ETFs. They are taking their time to really get to understand this new asset class, especially because it's all new to their clients. The next wave will begin as soon as that's out of the way. Plus, there is no reason to believe it won't happen, as some of these platforms already offer spot Bitcoin ETFs to clients who specifically ask for them. So, this is definitely going to happen. During the Empire interview, Cathie and Ophelia also discussed the chances of the SEC approving other crypto-based ETFs, especially Ethereum spot ETFs, before the end of the year. While Cathie is skeptical about Ethereum ETF approvals until there is at least a regime change in the SEC, Ophelia believes the odds may be higher than many believe. Here are more clips from the interview.
The Bitcoin ETF got approved on the basis of a lawsuit, not because there was a fundamental change of heart at the regulator. To just start with that, right? So this is a direct result of the judiciary challenging a policy of regulation through enforcement. Specifically, there was a lawsuit on this topic. That was it. Now, assuming you look at this as a point in time, you then need to look at what's the basis for that. And it comes down to, typically speaking, like two things. There are two key components. One is market microstructure. So, for example, if you need to have a large exchange of significant size, like the futures market, that is regulated and overseen, something like CME, that is very, very closely correlated to the underlying asset price, so that asset price discoverability is there. Pricing discoverability is there, right? There's a bunch of check boxes on, like, what does the market structure look like and does it actually meet criteria? And those criteria have largely been set by prior rejections of the Bitcoin ETF, but there's some precedent for them. The other thing you need is, in order to list a financial product of any kind, you need to have categorized the underlying asset. Because whether it's a security or a commodity or something new, it needs to fit within rules and regulations around derivatives, right? So whether those are futures or other things, right? And which regulator has oversight on this differs. Now, there are a bunch of lawsuits in the United States right now, including one with Coinbase, including one with Binance, specifically about what are these things, right? And we've been reading about that quite a bit, and it's coming down to what features do they have? What does utility look like? How is the ICO run? What is the underlying use case of this asset? Why are people buying it? Where are they buying it? What constitutes an investment contract, etc. So the issue is that if you don't have clarity on that, it makes it very difficult to then package a product off of it. Now, as you mentioned, Ethereum is pretty clear cut. It's commodity, easy, right? And it's pretty well established in the United States also. So that's a very different conversation. But once you get beyond that, you're talking about some of these other assets, there's not a lot of clarity on that topic within the US framework.
We should also, Ophelia, mention that we are one of the first two in line for the ETH approval. And, I think the probability is probably going down. Do you agree with that? Because, one of the telltale signs for Bitcoin that something was going to happen with the spot Bitcoin ETF was the fact that we were communicating with the SEC. And unless Ophelia knows something I don't know, I just think that the SEC is still biding its time, maybe studying the issues from what we can tell.
I think the one thing that gives me some hope here, and I think I'm less bearish on this than others, is that there's not a lot of differences between these filings for Ethereum and the filings for Bitcoin. They're the same structure, the same custodians, the same disclosures. It's very internally consistent. That means there's less to look at, right? Yeah. And there's less to look at given that these were only done a couple months ago. Mm-hmm. So there's also that, right? If these had been done 20 years ago, that would be a different discussion and you might want to revisit it. But given how fresh most of the documentation is, that's the one thing I think that puts me at a, let's say, more optimistic than it seems like most.
Please share your thoughts on Cathie and Ophelia's interview in the comments section below. As promised earlier, Matt Hougan, the CEO of Bitwise, the crypto asset manager and ETF issuer that made history in January after it shared its digital wallet address with the public, is also looking forward to another massive wave of institutional demand for spot Bitcoin ETFs. In his latest weekly memo to investment professionals, Matt urged investors to ignore Bitcoin's recent choppy price action and take the long view. According to the Bitwise CEO, Bitcoin is in a short-term holding pattern, which will quickly change after the halving later this month and after the ETFs are approved on national account platforms like Morgan Stanley and Wells Fargo. Matt believes this historic moment could occur within the coming weeks. As we wait, the Bitwise CEO noted in his memo, Bitcoin seems likely to chop sideways on small changes in sentiment. But long-term, we believe Bitcoin is in a raging bull market. Not only is it up nearly 300% in the past 15 months, but there are strong reasons to think that will continue, he added. In the memo, Matt further noted that the new wave of investors coming aboard through spot Bitcoin ETFs controls over $100 trillion, and if they allocate just 1% of their portfolios, a massive $1 trillion of fresh capital will flow into Bitcoin. Here are more excerpts from the memo. The January launch of spot Bitcoin ETFs opened up the crypto market to investment professionals in a major way for the first time ever. These investors control tens of trillions of dollars. Globally, the best estimate is over $100 trillion, and they are just starting to move into crypto. Think about the implications. We are all excited about the $12 billion that has flowed into ETFs since January, and it is exciting. But imagine global wealth managers allocate just 1% of their portfolios to Bitcoin on average. That would mean approximately $1 trillion of inflows into the space. Against this, $12 billion is barely a down payment. 1% down, 99% to go. Matt estimates that the $12 billion that has flown into Bitcoin through BlackRock and other spot Bitcoin ETFs is only 1% of what's coming within the next few years. Do you agree with his estimates? How massive do you think that will be for Bitcoin and the overall digital assets industry? Please drop your comments and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.